Welcome back, and today we are diving deep into a story that sits at the fascinating intersection of corporate governance, executive compensation, and market psychology because when Elon Musk's 2018 stock shares officially went live, Tesla's stock didn't celebrate. It slipped. Now, let's unpack exactly what's happening here, because this story is more layered than it appears on the surface. Cast your mind back to 2018. Elon Musk was granted one of the most audacious compensation packages in the history of American corporate life. No base salary, no cash bonuses, instead, a purely performance-driven stock option plan that was entirely contingent on Tesla hitting a series of extraordinarily ambitious milestones. We're talking about market capitalization targets, revenue benchmarks, and adjusted EBITDA thresholds that, at the time, many Wall Street analysts genuinely believed were borderline fantasy. The full package was valued at potentially tens of billions of dollars, making it the largest executive compensation deal ever structured in corporate America. And here's the thing: Tesla actually hit those milestones. Against considerable skepticism, the company scaled its production, grew its revenues, and built itself into a trillion-dollar enterprise. So Musk earned those options. At least, that was the original conclusion. But then came the legal turbulence. Delaware courts intervened, initially voiding the compensation package in early 2024 after a shareholder lawsuit argued that the board approval process had been compromised, that the very directors who approved the deal were too closely tied to Musk himself to act as truly independent arbiters. The ruling set shockwaves through the executive compensation world and raised serious questions about shareholder rights versus board authority. Tesla and Musk fought back. The company moved its state of incorporation from Delaware to Texas, and shareholders were asked to ratify the original 2018 package in a vote, which they did, with a majority of shareholders backing Musk's compensation in mid-2024. That vote itself was remarkable. It represented retail investors and institutional players making a clear statement: we want Musk incentivized, we want him here, and we want him compensated accordingly. Now those shares are going live, becoming exercisable, and the market's reaction is telling. Tesla's stock slipped. And that, frankly, deserves serious scrutiny. Why would a company's stock decline when its CEO is finally receiving compensation that was already priced in, already voted on, already expected? The answer likely lies in the mechanics of dilution. When stock options are exercised, new shares enter the market, and that dilutes the value of existing shares. Each current Tesla shareholder effectively owns a slightly smaller piece of the company pie. Even when investors intellectually understand this is coming, the moment of execution can still trigger a psychological and mechanical response in the market. There is also the broader context to consider. Musk's attention has never been more divided. Between Tesla, SpaceX, XAI, his social media platform X, and now his increasingly prominent role in political circles, investors are quietly asking whether the man being compensated so extraordinarily for building Tesla is still fully focused on building Tesla. That question doesn't have a clean answer, and markets hate ambiguity. What makes this story genuinely fascinating from an investigative standpoint is what it reveals about the deal between a visionary CEO and the market that backs him. Tesla gave Musk an almost mythological compensation structure because they believed he could do the impossible. He did. But the moment those rewards materialize in real, tradable shares, the market pauses, recalibrates, and sells a little. Perhaps that is the uncomfortable truth at the heart of this story, that in the world of high-stakes corporate finance, even earning exactly what you were promised can still make the people who promised it nervous. The question now is whether Tesla's fundamentals are strong enough to absorb this moment, or whether this slip is the beginning of something more significant.